Gulf has both regional and international banks clamouring for greater stakes in the market. With competition increasing, innovation has become the name of the game. For more, we're joined by our correspondent in the Middle East, Joanna Longworth. Joanna, good morning to you. So just how big is the competition becoming?
Well, there is a lot of competition. I think probably the pure Islamic banks are slightly underperforming in comparison if you compare them with the conventional banks. But obviously, Muslim investors wouldn't necessarily make that decision. It's not a purely commercial decision to go into pure Sharia financing. It's an ethical and a religious decision. But if you look at the industry as a whole globally, there are some people who say that it is a $400 billion US industry. Others estimate it to be up to $1 trillion. So this is a hugely growing sector. It is growing in some areas much faster than conventional banking. We also know that annually the figures are growing from 20 perhaps to 25% each year. And this growth in itself is causing some problems for the industry. If you think about it, each time a Sharia compliant product is created, we have to have 3 different types of people involved: the bankers from each different sector, and lawyers, and of course you have these Sharia scholars. Now, there are very few of them in the world, so it's quite a complex issue creating financial products, and this in itself is creating challenges for the industry as a whole.
Islamic finance is not a new phenomenon. Its principles have been around since the early days of Islam. Today the sector is enjoying a boom due to more and more people adhering to Islamic values and applying their religion to economics.
Here in the Gulf, Islamic finance is a €200 billion industry that's growing fast. Different countries have different interpretations of Sharia law, but they all agree that Sharia law forbids the payment of interest and instead requires profits to be shared among investors through lump sum or regular payments.
And this has meant those wishing to abide by Sharia law in their finances have much less investment choice than conventional investors. Added to this, Islamic products based within a non-Islamic financial framework, like an Islamic window in an international bank, has led to skepticism from Muslim investors and challenges to the industry.
We see that international banks or conventional banks have really a big challenge in terms of their Islamic credibility, because what they do is conventional finance. So when you go to a customer and say, we offer you an Islamic product, the observant are very skeptical.
The challenge has not stopped international banks from trying to cash in on this growing sector. Deutsche Bank, for instance, have announced it will be launching a range of new Islamic products covering all asset classes, believing more innovation is needed in the Islamic corporate sector.
The Islamic banking sector is clearly, the constraints are coming from the offering side of products. And there are 2 reasons of that. One of them is clearly has to do with the structuring aspect of financial products within a Sharia framework. Clearly the restrictions are, I would say, are a little bit more pronounced than within a conventional framework. But secondly, and probably more importantly, is the type of players that have been active in the market. We think that until now, the fact that no investment banks, international investment banks, have been involved in that market has clearly also restricted the capabilities of that market at the offering side.
However, the head of HSBC's Islamic arm, Armana, based in Dubai, Iqbal Khan, denies there is a shortage of Islamic products available to investors.
It was true in the past, but it is no longer true. Today, Islamic finance industry offers to the retail consumer, to the corporate banking client, to the governments, a whole choice of products, ranging from the equivalent of sovereign bonds, i.e. sukuks, which HSBC was privileged to be associated with and continues to be in a leadership position in that space. In the retail side, investors today can have current accounts, can have home financing, can have consumer finance. So today there is a whole variety of choices which are competitive, at the same time Sharia compliant.
As international banks compete for a slice of Islamic finance pie, it is the pure Islamic banks which are capturing the bulk of the market, despite the fact their products are comparable. So the challenge to international banks remains the issue of overcoming skepticism which surrounds their Islamic products.
If you consider there are sort of three types of Islamic investors, you have the very observant, as they're known in the industry, and these are people who really are perhaps provide the biggest challenge. They're a big section of the Muslim investors, and they are people who don't feel at all comfortable investing within an international bank which has this Islamic window. And then you have the other range of people who are very happy that there are just any Islamic products for them to go for. And so it's perhaps those people at the very observant end that provide the biggest challenge for international banks. But another issue that's coming up in the industry is the sort of financial products and the innovation. And one of the things that has been very successful so far is the Islamic bond known as a sukuk. And Iqbal Khan, the head of Armana, which is the Islamic financial arm of HSBC, mentioned the sukuk. And what we're seeing now is that governments trying to raise money for major projects like the light railway here in Dubai and even big airlines, they are using sukuks to raise huge amounts of money. So it's a really very fast-growing industry.
Joanna, thanks for that. Nice to see you. Joanna Longworth, our correspondent based in Dubai. We're going to take a short break. Still to come, UK's Marconi says it's open to all options following the falling out with its dominant customer BT. But what are those options? We'll find out.
You're watching CNBC, minding America's business.
It's a fact. 4 businesses fail every